Hello everyone, and you're watching Bitcoin Bubble News channel. This means that I believe that any big amount of money should have a position in Bitcoin if they study it and decide that they like it. I do think it makes sense to hold some Bitcoin if you're in charge of a company treasury, a pension fund, or a central bank. Lyn Alden starts by pointing out that it is smart from a strategic point of view to keep some Bitcoin for big capital pools. She says that Bitcoin is a scarce asset that has a history of good performance, making it a good choice for managing a company treasury, a pension fund, or even a central bank. Bitcoin is a great way to save money in an economy that is becoming less stable because it is hard to get and not controlled by a single group. Alden says that institutions are naturally risk averse and don't do crazy things like putting all of their resources into one stock. She does say, though, that the first thing that makes sense is to just hold some Bitcoin so that you don't have no exposure to such a revolutionary asset. This video has been liked, subscribed to, and post alerts have been turned on. Please take a moment to do these things. You can also watch our other videos about cryptocurrencies and digital assets in general. Please share your thoughts and comments in the part below. For the channel's growth, everything you do is very helpful for the YouTube system. Thanks and have fun with the movie. It does make sense to hold some Bitcoin if you're in charge of a company treasury, a pension fund, or a central bank. To put it simply, it's a scarce object that performs very well and has a strong network effect. 15 years in a row is by far the longest coinage. It has proof of work and a very simple pattern. It's clear that big amounts of money don't really put everything into something. In that way, they don't really put themselves at risk of tail risks. But I think the first thing they need to do is stop having zero. So yes, if I were in charge of any pool of capital, whether it's a large private pool of capital or a public pool of capital, one thing I would do is make sure I had some Bitcoin. But most of the time, people in these jobs think about the risk to their future. So it's more about what makes them look bad or what could hurt their job and reputation than what will help the country in the long term. Because of this, choices like these take a long time to make. In the financial markets, it's funny that being wrong with other people doesn't hurt your job as much as being wrong by yourself does. So if you go against the grain and it doesn't work out, you'll have to do it again, even if it does work out in the long run. If it doesn't work out in the short term, let alone if it doesn't work out at all, that's how you get fired. That's how bad things happen. But if you're kind of wrong but agree with everyone else, that's fine. You don't get fired for not having Bitcoin on your books, right? And so that's kind of the safer play from a job point of view, even though I think having some Bitcoin in your pool of capital is smart. That might happen in the future, but not right now because Bitcoin is still not very popular. So it changes a lot and it's still in the strong approval phase, right? Also, you should know that the market is still completely flexible. There is a total adjustable market and Bitcoin is, hitting that total adjustable market. Different people have different ideas about how big that market is. So because of that volatility, it's hard to use it as your only cash during that time. A lot of people treat it more like an investment in their savings. People will sometimes use it as a way to pay for things, but they'll still use these more stable, nationally managed currencies while this smaller one grows up and becomes what it will be. In other words, it's hard for a country to switch to a Bitcoin standard right now. On the other hand, if Bitcoin is 10 times bigger or more and is owned by more people, it will be less volatile. This means that more people will be able to buy it without worrying about whether it will go to the moon or crash. It might be more likely to happen once it's been around for 20 to 30 years instead of 15 years like it is now. The unit of account should be the biggest and most liquid thing, right? In any given country, that's generally their fiat currency right now. Around the world, it's mostly the dollar. People use these as their denominators for other things, but they can change over time. They are the big liquid units of account. People used to think of the dollar in terms of how much gold it could buy. When the dollar system switched gold, it became a bigger and bigger networked asset than gold. We now price gold in dollars or euros. That turned out a little strange. Over time, I think the same thing could happen with paper money, but it will take a long time. That seems like a likely way to go. Though I don't like central banking in general, I believe that's what would most likely happen in that situation in this day and age. Owning Bitcoin is a good first step, but making Bitcoin legal cash is also a simple first step. Yes? So give people a choice, like in El Salvador. It's interesting and it shows how early it is. People in El Salvador can use Bitcoin as money, but they still prefer to use dollars. Capital gains taxes are the only thing that really stops me from spending more Bitcoin than I do. That it adds difficulty to accounts and costs more. But mostly it's the paperwork that comes with doing all of your little deals and treating each one as a sale that needs capital gains taxes. That's a mess. Authorities leave it that way on purpose because they only want their own cash to be used as money. If someone wants to run this with a positive Bitcoin view, I think the first thing that should be done is to make it legal tender. Another option is to say that the first 1000 or 2000 euros spent each year are not charged. Yes. Like, okay, if you're going to sell €1,000,000, maybe we'll tax that. But if you're going to sell €1,000 because you're actually buying stuff with it, that will kind of get rid of that accounting burden and you can raise it over time until it becomes legal tender. Basically, you know. There are political realities in a country and the consensus is nowhere near what we're talking about now. So this should be very much seen as outside the box, like how El Salvador is an outlier in based on what Alden says, the future will have bigger structural inflation. She says that countries with long-term budget deficits like the US are making paper currencies less valuable over time. In the US, tax payments are becoming more and more dependent on the financial markets. If asset prices go down, it will make it harder for the government to collect taxes. As deficits continue to grow and population problems like shrinking workforces make things worse, it looks like the currency will lose value. Bitcoin and other hard assets, on the other hand, will gain from this situation. According to Alden, the value of currencies will likely fall over the next few years compared to harder investments like Bitcoin. Investors should be ready for this to take time, but it will happen. It will probably take a while for double-digit inflation to stay in place. Whenever there is an energy problem, I believe that prices will rise by more than 10%. When inflation stays above 10% for a long time, it gets a little harder to happen. But I do think we're in a more structurally inflationary time than we were in the 2010s. For example, in the US, we're running about 7% of GDP deficits during a time of low unemployment and an economic expansion, let alone when those numbers are compared to those of a recession. Not when there is a slump. They won't be going away anytime soon. That is really locked in. One of the problems with the US compared to Europe and other places that our tax receipts are more financialized. This means that if the stock market doesn't do well, it can affect tax receipts, but it's not a big deal. On the other hand, in the US, tax revenues are almost always linked to stock market success, though it takes about 12 months, and